Thank you, David and Courtney. Welcome to the Halftime Report. I am Frank Holland in for the Judge Scott Wapner. Tech earnings, they take center stage as the committee makes some major moves on the back of earnings. Joining me for the hour, we have Joe Terranova, Stephanie Link, and Jim Leventhal. Before we get this discussion started, a quick check on the market. You will note the S&P and the NASDAQ both in the red. The NASDAQ down more than 1%, the S&P down 0.5%. The Dow, however, up just over 200 points as we see a rotation out of tech. Joe Terranova, I want to turn to you with that. I was just looking at the things that are the names that are having the biggest negative impact on the S&P. It's not surprisingly Meta and Microsoft, but it's NVIDIA, it's AMD, it's Oracle. It's all those names that have been powering the market higher so far this year. Is this a meaningful inflection point, or is this just a reaction to some earnings and people deciding, I guess, to put their bets in different places?
No, I do not believe that this is an inflection point. I think this is just a return to a degree of normalcy off of what has been a really strong outperformance from the segment of the market that you just identified, Mag 7, AI adjacent. Keep in mind the significant underperformance of the S&P equal weight over the last several days. We were citing statistics that the differential in performance between the S&P and the S&P equal weight was the largest that we had seen since the 1990s. So if you run an equally weighted strategy, I'll raise my hand. Okay, when you run that equally weighted strategy, a day like today offers a degree of relief. S&P equal weight is up about 40 basis points. So you're kind of getting a little bit of a return to normalcy more than anything else. We'll dig into the numbers as it relates to three mega caps that reported. There was some good there, there was some bad there, but I think the commonality of all of it was about, okay, what's your cloud revenue? Because that's how we're going to see if you're monetizing the AI spending, and what are you thinking about looking forward in terms of your AI spending, and where's that capital going to be coming from?
All right, speaking of commonality, Microsoft and Meta, they have one thing in common, taking that charge. You know, investors don't seem to like surprises. Other than that, they seem like pretty good reports, Steph. Other than raising the CapEx, was there something else in those two reports that you didn't like that you think justifies these downside moves?
No, I thought these quarters both of them were very good. Expenses, that's the sensitive point for all of these stocks. How much are these companies spending? We know they were going to spend $400 billion in CapEx, the big ones, the big names, this year. Now it seems to be even a little bit more. So for me, I looked at Microsoft, and I was not an owner yesterday. I am now an owner today because I'm looking at this report, and they beat in all three segments. They beat revenues by 3%. They had commercial bookings up 111% year over year. Their RPOs grew 51%. That's future look at revenues to come. Azure, I know everyone wanted 40% Azure growth. They got 39%. I think that is silly because it expanded 200 basis points, but that was the sticking point. They wanted a clear beat. I think that still is very, very positive. And so to me, down 3.5%, 4% when it opened this morning, I started adding to a position.
You know, in all fairness, that 40% was kind of the whisper number. They did actually beat the estimates according to Street account, but the 40% was kind of that number out there in the street lurking. I want to go back to that RPO. I was actually talking to the team about that. Yeah. Up 51% year over year, about $300 billion, and it doesn't account for OpenAI.
That's right.
So it could be even bigger. We made such a big deal about Oracle and their RPO. Why do you think investors are just shrugging off Microsoft's RPO?
They're just, look, the stock was up 28% headed into the print, and they were expecting a big beat, a bigger beat in Azure. Really, that was really the story. The last couple of quarters, the company has been able to beat their Azure numbers by 300 and 400 basis points. So this only 200 basis point beat is the reason why I think you're just seeing a sell the news. There's nothing in here that is alarming whatsoever. And if you want to go into Meta, we can go into Meta because that quarter.
I mean, you led us there, Steph. You might as well
go there.
Go ahead.
I'm going to go there because I
added
to that this morning too, because I think down 12% is absolutely silly. Look, I mean, I was not happy that expenses went higher. None of us are happy that expenses went higher, but the higher expenses are leading to very strong growth. You're going to see 21% growth this year in total revenues, operating margins at 40%. If you look at what they actually reported in the quarter, they beat revenues by 400 basis points and grew 26%. Operating margins also beat at 40.1%. The family of apps, that actually beat as well. So you see the revenue is coming in better than expected, and so the spend is working. And also, by the way, they're seeing ad impressions up 14% and price per ad up 10%. They're seeing monetization. That is exactly what I wanted to see. So not happy at all about expenses, but down 12% after you see this kind of growth. So you're now at 21 times forward estimates for 21% plus growth.
Steph, you came ready to talk about Meta. You had all the metrics right at the tip of the tongue there. Jim, I don't want to leave you out of this one. You own Alphabet. I mean, everything was pretty good. Everything was pretty good. One of the things that really stuck out to me was the Gemini numbers, the monthly numbers. I mean, trailing OpenAI by a lot. It was $650 million a month compared to like $800 million a week. So there's a big gap there. But is that encouraging when you're seeing that growth from Gemini at the same time the search numbers beat expectations?
Yeah, the search numbers beating expectations is very encouraging. So is the fact that the cloud services, Frank, were up 34%, and YouTube's doing well, et cetera, et cetera. I mean, basically, this is a multi-cylinder engine that is firing on all cylinders. I think what is intriguing, though, is where you started, because if you go back 5 months ago, we had a big controversy in the markets about what exactly was going on with the search business at Alphabet, at Google. And you'll remember Eddie Q, Senior Vice President at Apple, was testifying that on Safari, they were seeing Google search queries going down. That evening, just to remind everybody, that evening, Google came out with a press release saying, hey, we're seeing search queries going up, including on Safari. Now, that I have been unable to square those two facts, those two statements since then. And what we've had in addition since then are two earnings reports from Alphabet that clearly shows the search business is growing really quite well, and they've figured out how to use artificial intelligence. Whether it's the AI overview, Gemini, they have many different ways that they are figuring out how to monetize and use AI. So I think in this controversy, this conflict that I can't resolve, it's now clear that Google, Alphabet was right, and the search revenue is going terrifically. Let me go also to the cloud business, as I said, up 34%, increasing margins. You've got a huge backlog. I think the backlog was up 45%. A lot of that coming from companies like Anthropic. So there's just a lot of things going right at Alphabet. Steph, to what you said about Meta and the valuation, totally agree. I'm not in that stock, but the valuation, where it is on Alphabet is similar, meaning that there are probably future gains ahead. I will say this regard to the overall market, whether it's Meta down, Microsoft. Look, the markets don't go up every day. The last several days we've kind of gotten accustomed to NVIDIA. I know we haven't talked about it, but NVIDIA adding $200 billion of market cap a day. Guys, that's not going to continue every day. Let's take a breath here.
If I could react a little bit. First, I think Meta now is actually cheaper.
Yes, it is.
Than Alphabet.
21 times versus 24 times.
Alphabet's quarter, Jimmy, you're correct. I mean, that was a fantastic quarter, and the strength of YouTube is remarkable. I heard David Faber on the network talking about this with Mike Santoli. If you think about YouTube, the valuation's probably right now rivaling Netflix.
That's what I was about to say. Same thing.
It's right there. So it's remarkable what they've done with YouTube. But Steph, I just want to ask you, because some people have said to me this morning, well, okay, why is Meta utilizing the debt market? And any reference, any engineering of utilizing debt from these Mag 7 companies is something that the marketplace is going to frown on and say, okay, here we go. We're going back to the 90s.
We're not going back to the 90s.
No, I don't think we are.
Come on. I know what you're getting. I know what you're getting at. I don't really care how they.
Well, clearly you don't
money.
care. You bought more.
Well, of course.
But is it concerning for them to take out $25 billion in bonds? And if this is concerning, why wasn't it concerning when Oracle did it? Oracle issued some bonds.
It is concerning when Oracle did it. Okay, it is. I mean, the day that Oracle made the announcement is the high. The stock has not traded higher. That was it. It went parabolic and it has gone down. So, no, Oracle loves debt. Not to the degree that Meta is, not to the degree that Oracle is in terms of its endearment of utilizing debt. But I don't know. You just look at it, you say to yourself, well, why is Meta have to?
Why are they issuing debt?
Right. Why do they have to issue $25 billion?
Because they probably, they do see growth. I mean, to raise the expenses from 114 to 116 billion up to 116, 118 billion just this year alone, and then they said next year is going to be noticeably more than this year. I mean, that is huge. These are huge numbers.
These are huge numbers.
But my point is that while I'm disappointed in it, they're seeing results. Like the family of apps, right? 25.9% growth. It expanded 410 basis points sequentially. That's crazy growth for a company of this size.
So you think we could trust management more than we were years ago when they were spending money and we were like, wait a second?
Because we weren't seeing the results.
Okay.
See, we are seeing the monetization here, and the price per ad tells you that at 10%. That's very impressive. And they were one of the first to see monetization. And so they obviously see it. They want to build momentum off of it. And they're going to increase expenses as a result. I mean, look, again, for the third time, I'm not happy that they're spending more, but if it wasn't leading to results, that's where I would actually sell the stock.
Very quick, I was talking to somebody who's an investor. Are you concerned at all that they're offering these notes that I think it's 1.4% above treasuries? I mean, is that something that concerns you at all?
No.
Okay.
I could tell you in talking to people that manage taxable fixed income portfolios, they obviously think there'll be overwhelmingly strong demand for what is investment grade paper.
All right.
I think this is just corporate finance, by the way. I mean, this is what you actually get taught in business
corporate
school.
Finance
Let me finish. Okay, but your disapprobation, if I can use that word, is simply because you're used to not talking about debt with these companies. But if you think about the cost of capital for issuing equity, like these guys say, look, we want to keep more equity to ourselves. Plus, they're using this debt to finance data centers, right? And they're looking at the data centers and saying, we have these cash flows that we can see coming in from the data centers, or at least that we project coming in, and that more than covers the interest expense. I mean, again, this is like what they teach in business school. I'm not trying to be snobby about this. Is what they teach in business school.
They have a $50 billion 5-megawatt project in Louisiana for a data center that they've got a fund for next year. They have one also in Texas as well. And they're just going to continue to build out. And so I'm okay with them doing whatever. And I think you're right on the point of just this is corporate finance.
I agree with both of you. I think you're both correct. And look, we've seen others, Apple, on an annual basis, they've issued debt. So
for years.
It's not like this is unique. But I do think the market is sensitive to, okay, we have this new innovation, and are we going to fund it with cash from operations? We like that. Or are we going to fund it with debt? We don't want to go back to that place.
Is it simply that, or is this the street maybe at least today saying you might be spending too much money? Like, for example, Meta, they raised their CapEx guidance, but at the midpoint it was only $2 billion, which seems like nothing now. It's a lot of money, obviously.
But people bought this because it was the end. It was the year of efficiency. It was the decade of
2 years ago.
The decade of efficiencies. So now they're like, okay, now we're done, right? I mean, we all expected some discipline. And we didn't get it. So I get the reaction. I think it's an overreaction. I think it's an opportunity to buy a phenomenal growth story that dominates the industry. 60% of the world uses Facebook or Meta or Instagram or any of their products. That's enormous. It's an enormous moat.
What about Microsoft? So this overreaction, the fact that they're a cloud business that's actually gaining market share, they're going to get all of OpenAI's compute business. Yeah. It seems like they're attracting some other AI workloads. Doesn't their spending seem at least more justified than Meta? Even if you think Meta's unjustified, doesn't it seem more justified considering the upside they have?
Yeah, but also their operating margins are up 230 basis points year over year, and
expansion.
And that's not so much. That's not going to be the case for Meta next year from this year because of the spend. But their operating margins at Microsoft. I mean, I had to take a double take on some of these numbers. They were really quite good.
Yeah, I thought Microsoft was down the middle of the fairway. There was nothing really to be troubled by. I don't think down 2.7% is that troubling either, given that we heard the announcement several days earlier with OpenAI, where they were given 27% of the company and had a very clear agreement in place through 2032, and the stock responded to that. So I don't think you make very much of what you see going on post-earnings at Microsoft. I think maybe, to Steph's point, Meta, yeah, that's a battleground conversation. And to Jimmy's point, Alphabet, positively, that's a battleground conversation as well.
And maybe just to try to continue to tie this up in a bow, I mean, let's note that the equal weight S&P 500 is up about 0.5% today, while the NASDAQ is down.
You say that again, Jimmy?
The equal weight, I know, my equal weighted Joe T. Equal weight S&P 500 up 0.5%. What's the NASDAQ down? I'm not looking right now. 0.8%?
Yeah.
We were due for a little bit of a rotation, and if these earnings are the catalyst, big deal. I mean, look, these stocks are up so much. I'm trying to tie this up in a bow. They don't go up every day, and the rest of the market can perform once in a while.
We are seeing a broadening out today. To your point. But guess what's leading? The banks are leading, and that's because they all had great earnings. They rallied, and then they kind of settled in a little bit, right? They haven't been doing very much. I think that after you listen to Powell yesterday, and even if they don't go another 25 basis points in December, you're going to see a steeper yield curve, and that should absolutely help the net interest income story for all of these banks. And we're starting to see M&A. I mean, Huntington Bank, they made 2 deals in the last 4 months. That's great, and that's very positive. And I think people are appreciating those good earnings. I think eventually they're going to rotate back into tech, and they'll appreciate the growth that we're seeing at tech.
We're going to get more on the Fed in just a minute, but Jim, you said this rotation is not a big deal. Guess what is a big deal? The 2 earnings reports we have after the bell today. That's Apple and Amazon. Right now, we're joined by somebody else who's a big deal, Steve Kovac. He joins us now with what to expect out of Apple. Steve.
Yeah, Frank, and thanks for that, by the way. So, look, I'm here in Cupertino right now. We're going to get those results after the bell, about 4:30 p.m. Eastern. And what we're looking for is that momentum that we've been hearing about over the last month or so since the iPhone 17 launch, what that actually looks like in this report. So this report's only going to reflect the first several days of iPhone 17 sales, but analysts are already super optimistic, expecting high single-digit revenue growth for the September quarter. And then the guidance, which we'll get on the call, will be also a very similar revenue growth picture, too. And that's something very important to keep in mind, even as Apple sits out the AI conversation. And one other thing to pay attention to is services. This is the end of their fiscal year 2025. So we're going to get the full year services number, which is going to expected to surpass $100 billion for the first time. That's really been the growth engine of this company as the iPhone has kind of slacked off for the last several years now. But that, of course, is turning around. And one other thing to pay attention to is China. We've been getting so many signals that that base model of the iPhone 17 is selling quite well in China, in part because of the subsidies from the government giving customers there a discount. We saw some signs of recovery in China in the last earnings report, and we're expecting that to continue this time, Frank.
All right, our Steve Kovac waiting for those Apple results after the bell. Steve, thank you very much. Turning to all of you guys, the last thing you mentioned, tariffs, and also what's going on in China. The fact that the president made a deal to reduce some of the tariffs and imports out of China, Joe, is that a tailwind for Apple? I mean, is that something that you see moving the stock higher just longer term?
I think that tailwind was built into the market already earlier in the year. I think more recently, and I go back to August as being a significant moment that allowed the positive momentum we're seeing in Apple right now to actually catalyze. And that was in the Oval Office when we saw Tim Cook with the president. That seemed to be a moment where things have shifted. More recently, it has been about the uptake in the iPhone 17 looking a lot better than iPhone 16. Steph, I don't know if you agree with this, but I do think we're seeing an improvement in the environment in China. And I think that's important for Apple because the last several years, the revenue deceleration that we've witnessed, which really has been absent from this company relative to its mega cap peers, what it needs most is it needs that revival from China. I think we're seeing the early signs of that.
20% of the iPhones made in China.
Yeah, right.
And that's 50% overall is iPhones for Apple. So 20% of that 50% is China. So that is a big deal.
Jim, you own this one. You're an Apple shareholder. Are you going to upgrade your phone? I mean, do you believe in this upgrade cycle? Do you think this is a real thing going into the holiday season? You got to keep in mind, they released it ahead of the holiday season. So is this something that's going to be in your stocking stuff or somebody else's?
It's an interesting question because Motorola flip phone.
I might
still
actually.
Got the Star
but at first I was going to respond like I'm not the right barometer, but maybe I actually am because it's been so long, and I mean my touchscreen is actually malfunctioning at this point in time, and maybe I actually am representative of the pent-up demand. We know that. I mean, for 2 years now, it feels like we've been talking about a super cycle of upgrades that never materialized. Joe, I hear you talking about China, but maybe actually domestically and internationally outside of China, there is pent-up demand that's going to come through. Now, with regards, whether that's true or not, with regards to the stock, I mean, as a shareholder, I'm happy that it's up. And I do think that you've got to respect the momentum. And Joe, I'm sure you do as a momentum investor in the name. That said, from a valuation point of view, as a fundamental investor, I find it hard to put new money to work at this price.
So it's really the price, but what about the outlook of the idea of iPhone picking up, maybe they do a breakthrough when it comes to AI. I mean, don't you want to invest now with the idea that there could be some type of innovation for this company going forward?
It sounds great coming from your lips, Frank, but I mean, I think that's why we're at 270 and not 220 where we were not that long ago. I mean, heck, a year ago, I think we were at 160 a year and a half ago.
Yeah, important to know with the rest of tech down right now, Apple's up about 0.75%. Want to switch gears now to our Mackenzie Sagalos with what to watch when Amazon reports after the bell. Mac.
So, Frank, this print is all about Amazon trying to calm investor concerns over its cloud business, which is the company's revenue engine. It's lost big AI deals to rivals. Its backlog still trails Microsoft and Oracle. And then last week's 15-hour AWS outage has raised questions about its legacy infrastructure. But Bank of America says AI capacity should ramp in early 2026, and Amazon could be in a better spot to showcase its custom in-house AI chips and cloud edge as more compute comes online. And then on retail, Amazon's core business is expected to show solid upside, especially with accelerating online spend in Q3. Frank?
Mackenzie Sagalos live out in the Bay with the very latest on Amazon, also reporting after the bell. Mac, I know you're standing by for those numbers as well. I want to turn to you guys. One of the things that's been talked about a lot, Joe, you can kick this off, is that Amazon, the leader when it comes to cloud infrastructure and hyperscalers, is losing market share when it comes to AI workloads to some of its competitors. You think that's real? Is that something that investors should be worried about? Because this is a stock, despite the retail business, the ad business, it does trade on the cloud business.
So it is the weak link in the Mag 7. It is the disappointment of 2025. Myself and others have come on the network and said that they felt Amazon would take the lead in the Mag 7, and it hasn't. I've been wrong in that regard. I think when you try and mine for the reasoning behind it, it's very clear to me two things stand out. Number one, I said this the other day, and someone actually reached out to me and said, well, what about Anthropic? Yes, they have a relationship with Anthropic, but there is no relationship as it relates to AI that I know of with OpenAI. And the street seems to really value that and pay the premium for that relationship. In addition to that, what is going on with cloud? Because cloud is trailing its peers, and it's trailing its peers to the degree that is becoming somewhat troubling. In particular, after we saw last evening both Microsoft and Alphabet deliver on cloud. Amazon has to come around with that cloud and deliver in the same mannerism.
Link, are you equally worried? Any concerns about also the retail business, the end of de minimis exemption for small items? A lot of those items were sold on that marketplace. If we are seeing a slowdown in consumer spending, that could hit the ad business. So a number of areas that could potentially be impacted by the current environment.
No, I mean, I think the consumer business is very strong and the margin improvement will continue. That's important. Their ad business is absolutely booming. In terms of AWS, they have a 30% market share. Azure has a 20%. So I get that Azure and Google Cloud are both growing faster, but these guys still dominate the industry. What needs to happen tonight? They need to print an 18.5 or 19% AWS growth number. If they do not, stock goes down a lot down from here. I don't think that's going to be the case, but that's what all eyes will be on.
If it falls, are you a buyer, similar to what you did with Meta and Microsoft?
Yeah, because I think there's a lot of ways to win, and the things that I just talked about. I think they're continuing to take market share in consumer, in retail. International has a lot of opportunity. They've done a really great job in terms of cost discipline, so I expect the margins and the profitability of the company to actually see improvement. And I think we're just a little over-obsessed, myself included, on the AWS, and I get why. It's one of the fastest growing
last couple of quarters.
Yeah, but you know what? It's still growing. With that kind of market share, to grow 17% last quarter, that's still very healthy.
Is it the growth, or is it the fact that they're not leading when it comes to AI workloads? Which one of that is more important?
I don't know if they're not leading in AI workloads.
I mean, that's every report, every analyst note out there.
I don't know if that's the case. I think that we haven't even seen the Anthropic revenue yet and the details there. So, I mean, I think there's a lot of ways you win with Amazon.
Okay.
And oh, by the way, it's trading at 13 times EBITDA. Historically, it's traded at 18 times. So I'm not saying it gets back there, because obviously the growth is a little bit slower. But, you know, I think that they can get maybe 15, 16 times if they can show improvement in AWS. And I think, by the way, their consumer business should help from Prime Day as well. So we should see good numbers there.
All right, the ever-patient Jim Lebenthal, I'll give you the last word on Amazon.
Yeah, well, you guys just hit the fundamentals, and I agree with it totally. I would also just look at the chart. Maybe in the control room we could get a 10-year chart, because what you're going to see is that over long periods of time, the stock rises and then consolidates. I think we've just had a little rise after that mid-2020s consolidation. Maybe we consolidate a little bit further, but basically this is a stock that over long periods of time, look at that chart. Like, that's a stock that goes higher over long periods of time. And unless you see some fatal flaw, which none of us do, in the Amazon Web Services or the consumer or the logistics or you name it, Amazon Prime, the video, I mean, it's hard to shoot against this company doing over the next 10 years, or look at that chart over the last 25 years. It's hard to see it stopping its growth rate.
Look at you calling for a 10-year chart. You don't hear that very often.
I know, and then they went.
Joe, have you ever called for a 10-year chart?
Look at that chart.
It looks very pretty.
Look at that chart.
Frank, you don't want to go down the 10-year chart road with Jimmy and I.
I can see. By the way, Amazon up over 600% over the last 10 years. Coming up next on Halftime, let's get to our chart of the day. Look at this one. Chipotle shares taking a real big hit after lowering its sales outlook as consumers, they cut back on dining as they're feeling the pressure from inflation. Shares down more than 14%. Steph Link, you sold out of this one. You got out. You don't like burritos? What's going on?
Mea culpa. This has been a problem for a while. I've been fighting it. I was looking for anything to be positive last night. Anything at all. There was not anything to be positive. They missed on the revenue number. They guided down same-store sales for the third consecutive quarter. The operating margins missed. The restaurant margins missed. They've lost their way. I'm not sure this leadership team is the right leadership team. And I do not want to be emotional about it, but I truly believe it because since Boatwright has been there, they've done nothing but miss. So I sold out of it. That's one, and then I just don't feel good about it. I apologize to anyone who followed me into it. I actually am quite tempted in Starbucks, to be honest with you. I don't own Starbucks at this moment, but the turn certainly seems to be starting very early on. But the first positive comp in 2 years with a very good leader, that's on my radar screen.
Are you more Joe, are you more pro Brian Niccol or Starbucks?
Both.
Okay, that's a good answer.
So I think the question that you have to ask is this idiosyncratic with Chipotle, or is this the economy, the real economy, beginning to contract? Because some of the names that we hold that have done remarkably well, Royal Caribbean, Ulta, Garmin, they have all been punished this week. And Garmin, in their quarterly earnings call, they talked about the weakening that they're seeing from the consumer. Royal Caribbean, the same case could be made.
I think it's low and medium area of consumer. The high end.
Wouldn't that affect Starbucks then?
It could, but I think you get bailed out on Starbucks because you've got a CEO that's going to restructure.
Which is different than what you have with Scott Boatwright and Chipotle. Look, Chipotle, I think it's a combination of both. I do think low end is feeling the economic pressure, and they're losing that. They're losing that traffic at Chipotle. But I also can tell you, and this is boots on the ground, my kids and my kids' friends, they'll tell you the experience is different. They'll tell you maybe the food doesn't taste as good. They'll tell you that the environment, They'll tell you that the environment in the restaurants is not as what it used to be. Maybe the stores aren't as clean, but there's something that's different.
Well, Joe, you're hitting on something, Jim. I know you want to say something, but on the call, they talked about people 25 to 34, 25 to 35. That's where they're seeing a lot of weakness. Is this also maybe you're talking about the real economy where AI is impacting some of their sales? Because these are younger people. Maybe they're displaced out the job market. These are the people that will go to Chipotle. If you're 25 to 35, this is an overgeneralization, but you're not packing your lunch. You go out to lunch.
Yeah, I think you could make that argument, but I think there's something more. Look, I think it's about the experience.
Okay.
Right? The experience.
You look at
Jimmy.
Brinker, you look at McDonald's, you look at Starbucks. I mean, there are signs that there are okay things in the environment. So I do think this is a big Chipotle issue.
I think there probably is an idiosyncratic issue, although my son eats there almost every day. But besides that, I think there's an obvious problem here that we're kind of not touching on, which is the government shutdown. This is what I believe, that all these people who are furloughed or working without pay and the knock-on effect of all the contractors who are not getting paid. And, look, there is going to be an effect from the shutdown. The good news of everything I'm saying, I thought about this when you were talking about the cruise lines just a second ago. The good news out of this is at some point the shutdown is going to get resolved. So this should be temporary. Side note, let's get the shutdown resolved, guys.
All right, there we go. Link, another side. I want to give you credit for owning that one. I mean, you said, listen, anybody that followed you, you apologize. You own this one. I want to go to two other names that are consumer-facing that you're also selling. It's Deckers and Gap.
Yeah, and I did this last week. I haven't been on. So Gap, I was up double digits. I love the story. I love the management team. I like what they're doing with their brands and the creativity. Nothing wrong with the Gap. I just wanted to take the double-digit gains and call it a day. Deckers, they actually had a very good quarter. They actually had a double beat with Hoka, with UGG. Hoka, they actually gained 2 percentage points of market share. They had margins that expanded, earnings that grew 14%, total revenues 9%, gross margins expanded as well. So why did I sell it? I just don't think they lowered guidance to be conservative. I just don't think between now and the end of the year, the stock has a catalyst to move higher. That said, I might look at it in January with a fresh set of eyes because I do like the brands very much, and I like this management team as well.
All right, Deckers shares pulling back just about 1% right now. All right, we're going to turn to some committee stocks that are on the move right now. First up, we're talking Cleveland-Cliffs tumbling after announcing a share offering. Jim, you own this one. Pretty big share sale, just about $1 billion here.
Yeah.
Before, we talked about Meta issuing debt because they didn't want to issue shares. They're issuing shares. What do you think about this one?
Well, I mean, same thing from a corporate finance point of view. Anybody looking at the balance sheet at Cleveland-Cliffs is simply going to say, hey, there's a lot of debt there. So you know what? They're raising some equity. I think it makes sense. I actually think nobody should be surprised by this, all right? If you've been following the balance sheet for the last several quarters, it's been pretty apparent that it would be a good idea to take out some equity to knock down the debt. The stock is still up 33% year to date. Now, look, full honesty here, it's had a bad year. It's had a bad 3-year run here. But I do think that this should take out the concerns of that anybody has about the balance sheet. Let the company start growing from here. I think the things to focus on going forward are, number one, does Canada do anything with tariffs? And there's two things Canada should be thinking about. One is making a deal with the U.S., but the other is putting tariffs on Chinese steel that continues to come into the market there. And then the second thing regarding Cleveland-Cliffs is what looks like a pickup in domestic auto production that should very much help Cleveland-Cliffs business. Overall, that's what we should be focusing on going forward. As far as it being down 11, 12% today, that's what happens when you do an equity offering. The key thing is to see how it responds in the weeks to come, which, based on what I was just saying, I think it will resume the uptrend.
All right. Shares of Cleveland-Cliffs, as you mentioned, down about 11.5% right now. Want to go to ServiceNow. It raises full-year guidance on strong AI demand. Those shares up just about 4.25%. Joe, you own this one in the Joe T ETF.
You get a little bit more comforted when you own this position. I don't think you get overwhelmingly excited. Application software, this application software name in particular has been struggling. It's a name that has not performed so far year to date. There is some good execution here on the quarter. Nice job by Bill McDermott for that. We're seeing that there is a little bit of a turn. So you hope it's an inflection point. Let's see the stock prove itself out over the coming quarter and then deliver again next earnings report with something we saw similar to today.
All right, I want to get to one more of your holdings. KLA pulling back after hitting a record after earnings. You also own this one. Shares down about 2%.
Look, the semi-equipment names, in my opinion, are in the sweet spot right now. I think the decline we're seeing in KLA Corp is more indicative of a market environment that's punishing technology today than it is anything about KLA Corp. You could make an argument that the guidance wasn't as strong as the street anticipated, but look, Lam has already told us their story in their earnings report. Now you get it from KLA Corp. Both of them are solid. You're going to hear from Applied Material, and I keep talking about Teradyne, which I think, Steph, you bought recently. I think that's the fourth semi-equipment name that you really want to focus on for ownership.
It was up 20% yesterday. Great quarter.
Also got to keep it in perspective. I mean, stock's up about 90% year to date, so very small pullback compared to the year-to-date performance. All right, coming up, and we are back on halftime with final trades. Jim, you're up first.
Cisco Systems, many fundamental things going right at the company, but the shares, they just have great momentum.
Oh, that's it. Steph, you're up.
Quanta Services had a very good earnings report. They grew revenue 17.5%, organic growth of 10%, and electric backlog is up 15% sequentially. So electrification theme is still alive and well.
All right, Joe T., you got the last word.
Steph, you know the industrial train technologies?
I certainly do.
Okay, boy, that was quite a quarter. Take a look at the chart. This is an inflection point, positive momentum building.
Yeah, a big HVAC player.
Yes, sir.
There you go. All right, that's going to do it for halftime. The exchange starts.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. It is Thursday, October 30th, 5:07 p.m. The market has closed. As you can see, all the indices were down today. In this video, we're going to cover a lot of the stocks that they talked about on today's episode of the Halftime Report. Let me just show you real briefly some of those stocks that we're going to look at. So first, we're going to look at the indices like the SPY, the Q, the Dow, the Russell, and the VIX. We'll also take a look at the Euro stocks, and then we'll also look at approximately 15 stocks and ETFs that they talked about. And we've got them all flagged here, some of the strongest ones. I've already reviewed all these stocks, so I'm going to do some analysis of those using the Ichimoku indicator. We're going to look at Apple, Tesla, Meta. We'll also take a look at the sectors, which ones are strongest. We also have 7 stocks here and ETFs that we're going to cover that have been requested from our members. Remember, to become a member, it's really easy. All you need to do, folks, is go to my homepage, Blue Cloud Trading. There it is. And click on the join button. It's right next to the subscribe button. It's free to subscribe. Hit the notification bell so you can catch all these videos that I post. And then click the join button afterwards. And then select either Blue Cloud Trader or Blue Cloud Legend. You can also select Blue Cloud Supporter if you want to support the channel, but you'll be able to access the videos that I post under Blue Cloud Trader level membership. And under Blue Cloud Legend, you'll also get daily trade updates on the Blue Cloud portfolio. I also share my proprietary buy scanner in each of those posts. And I usually post them after you become a member. There'll be a new tab that pops up next to posts here. It will look like this. It will say membership, and that's where you'll find it. If you scroll down, this is where you can find the member-only videos. They're usually about an hour long or so. Okay, let's go ahead and get started here. We're going to first start off, actually, we need to look and see what happened today with the Dow. All right, so basically, as you can see here, in the morning, the Dow gapped down, and then it started moving up. Things were looking pretty good around 11 o'clock or so, though. Things started to take a turn to the downside there, and then continue to drop some more, down 0.23% by the end of the day. NASDAQ, it also gapped down. It was steady here, kind of creating that little triangle that you see there, and then it broke below that level and continued dropping. It was down 1.57%. That's a pretty big drop for the NASDAQ. S&P 500 also dropped. You can see it stayed stable there for a little bit, and then it broke through that, and then dropped another 0.99%. And the Russell 2000, you can see it gapped down in the morning. Okay, and that also around 11:30 a.m. or so, the market, pretty much the Russell was down as well, down 0.81%. If we look at the breadth of this market right now, what is it looking like these days? Well, if you look at the 200-day moving average here, you'll see that about 48.5% of the stocks are below the 200-day, and just 51.5% are above it. There's about 60%. A little over 60% of stocks are below the SMA 50, the 50-day moving average. About 63% were experiencing new lows today. And there's about 61% declining versus 34.9%, advancing. So that's interesting. Let's also take a look at the heat map. All right, and what you'll notice here is that a lot of the big names like Microsoft, Oracle, NVIDIA, Broadcom, AMD, Intel, Amazon, Tesla, and Meta were all down. Google was up 2.45%. Some of the financial stocks like JP Morgan was up, Eli Lilly, Johnson & Johnson, AbbVie. Looks pretty mixed for the day if you look at this from this view here. And let's look at the 1 week performance. How's that looking so far? Okay, there's the 1 week performance so far. NVIDIA up 11.38%. Let's take a look at the sectors. And let's zoom in here. And you'll notice that real estate, healthcare, financials were the top performers. They were only up slightly, though, 0.14%, 0.19, and 0.31. And then consumer cyclical was down the most, down 2.35%. There's a 1 week performance with communication services and technology at the top. So let's get into the stocks now. We're going to run through these very quickly. If you're unfamiliar with Ichimoku, this indicator that I'm about to use, it's a Japanese indicator. There will be a tutorial at the end of this video. It's going to be about a 5-minute video at the end. So if you want to see that first before coming back here, you're welcome to do that. Or you can sit through and observe Here's the S&P 500, the daily chart. Now, what happened today? These Japanese candlesticks that you see here represent price, down 1.10%. Here it was yesterday, giving us two days in a row we had reversal candles, and I brought that up in prior videos, right? I mentioned it on Tuesday. I mentioned it again yesterday in yesterday's video. I said there was a higher probability that price would probably pull back a little bit in the S&P 500. Just based on that, I mean, the price movement is really important. And when you see price developing these types of candles, like the spinning top here and the doji, there's a higher probability of the price dropping. This is what they look like on this cheat sheet that I have here. I'm popping it up so you can see what it looks like real quick. For those of you who are new, a bearish spinning top where the wick on the top is equal to the wick on the bottom. There's the body of the candle. And remember, if it's red, that means that the opening price is at the top of the body. The closing price is right there. Okay. The low is the bottom of the wick, and the top of the wick is the high of the day. That's the price. Okay. If it's a green candle, the opening price is where the body begins right there, closes there at the end of the day. Say if we're looking at a daily chart, for example, this would be 9:30 a.m. This would be 4 p.m. And the high shows you how far price moved up throughout the day. The low of the wick shows you how low price dropped throughout the day before finally closing at this level here. And there's multiple types of candlestick patterns that can give us some insights. They've got some funny names like Hanging Man and Shooting Star, Gravestone Doji. Okay. These are all Japanese. The Japanese came up with these to help give us some insights on what's really transpiring, okay, during the day or week if you're looking at a weekly chart. So yeah, you can see that price opened up lower. It closed lower than the opening price. Therefore, that's where we're at. So down 1.10% for the S&P 500. The thing is, we are still in an uptrend here above the Ichimoku cloud. We're above the moving averages, the Tengens in the 9 period, the 26 period, and the cloud. And the Chiku span here is above price. That's positive. How about the QQQ ETF? What's that looking like right now? That one also pulled back. You can see that's also a reversal candle there. Okay, that happened yesterday on Thursday. So when you see a flat body like that, what that represents is that the opening price and the closing price was pretty much at the same spot, at the same level. So there were neither the buyers nor the sellers were in control. It was just kind of flat. And then, of course, price dropped. So it might pull back a little further, maybe down to the Tengen, and we could see another drop of 1% or so, maybe, before it finds some support at that green line. The Dow Jones also dropped down 0.29%. We've got like a gravestone doji type candle here that has formed. FEZ down 0.76%. So that's the Spider Euro 50, Stocks 50 ETF. So volume is also, as you can see here, 3 days in a row, it's been increasing as price stalled at that 63.60 level and dropping now under the Tengen. We'll see what happens tomorrow. Russell 2000 also dropped, finding support at this 244.46 level. It's basically a monthly level. So let's look at the monthly chart for the Russell. So that purple line that you see right there, it's based on that circled candle. That's the high right there of that month of November 30th, 2021. Okay, so that's where we were. That's the highest level the Russell 2000 has ever reached back in 2021. And we did pierce through that level. We reached 250, 277. That's the highest level now. But the thing is, it's now returned back under. I take that back. Not right under yet. It's 244.85. So, but it's right on the cusp there. And so we'll see what happens. That's the weekly chart. And here's the daily chart, finding support right at that level. The VIX, it just dropped 0.06%. Not that much. Okay. Even though there's a green candle here, the reason why it's still down, as you see here, 0.06, is because, well, when price basically gaps down slightly, I think that's what happened there, as you can see here. So the opening price was right down there at this level, and then it closed slightly under the prior day's candle, the closing price of the last day of Wednesday. All right, let's keep going. We're now going to take a look at the stocks that they reviewed. Not all of them. Some of them are in my portfolio, so I'm not going to cover a lot of stocks, but We are going to cover 15 of them. And what I've done here, folks, is I've highlighted 4 stocks, 4 out of those 15 that look pretty good still technically using this indicator. The rest of them are looking pretty weak. And so let's look at them. Here's Cisco, for example. Okay, let's look at weekly chart. It's looking pretty good here. You can see that price is moving up. We've got the Tenkan-sen, the 9 period is moving up. The Kijun-sen, the 26 period is moving up. The Chikou span is moving up. It's above price. That's good. The green line is above the red line. Senkou span A, which is the cloud, okay, that's above the Senkou span B. Everything looks very good here. So I like what I'm seeing with Cisco on the weekly chart, and I like it on the daily chart as well. Now, it looks like on the daily, let's do this. I want to check to see where it's stalling here. Hold on. There's a high right there. So the high there was 72.55. Okay, we got above it, so it broke through that level. That's a nice little buy signal. Honestly, I like Cisco, so I will be watching that tomorrow. Might be a stock that I add to the portfolio, and if I do, I'll post it in that membership post segment that I just showed you guys. PWR. Okay, up 1.15%. Quanta Services. Here's the weekly chart, looking good. Okay, we've got all the elements of the Ichimoku in the correct order with price above all the moving averages. Here it is in the daily chart, same thing. I like this one. I'm also liking the volume down below. You can see that's higher volume than on Wednesday. So I'm sorry, on Tuesday. There was Tuesday, there's Wednesday and Thursday, and we broke through this little consolidation space right there. Okay. So I like that. PWR looks good. It's in the industrial sector, engineering, and construction. Their next earnings, actually their earnings did come out October 30th. Let me see. Did that happen already? Is it after? Let's see what it's looking like after hours, guys. Hold on one second. There's a little button here where I can include the post-market data. So it dropped a little bit, down 0.63% after hours. So... and if we want to get a little bit more insight on PWR and its earnings announcement, all I need to do is just switch it over to FinViz here, type in PWR, and let's take a quick look at that one real quick. I want to see if there's what kind of information we can get from this. There's the earnings. You can see that little green button there. I'm going to click on that, and we can see that they reported $7.631 billion, which is 3% more, a surprise of 3% more revenue than what was expected by Wall Street. Okay, so that is what's leading this to move up a little bit. You can see year to date, this stock is up 43.59%. It's got a profit margin of just 3.73%. We can look at the sales have been increasing substantially here. Shares outstanding have been relatively steady. There was an upgrade by Jefferies analyst here with a price target of 469. Okay, we're still under that level of 469. And yeah. Okay. Anyway, so that's that. Let's go back to the stocks now. All right, so we're going to look at TER. Teradyne Inc., technology sector, semiconductor equipment and materials, up 1.69%. One of the few semiconductor stocks that was actually up today, so that's good. Continue to move up. Let me show you the weekly chart real quick. You can see here, actually had a position back here. Now that 169.96 level is actually based on this level down back here in 2022, it looks like, right? Or 2021. December 31st of 2021 is when it reached that level of 169.96. It came close to it right there and then dropped. And then it continued to drop from that level. And it basically from there, it dropped about 56%. And now it has recovered quite a bit, hasn't it? It's up 167% now. So it's above the 169.96 level. I like this one. I like Teradyne. TT, which is Train Technologies, basic materials sector, building materials. It's not really a strong sector these days, but this one does show strength here. Let's look at the weekly chart. That's a beautiful chart. We got price above both of these moving averages here. The only thing with the weekly chart is that the Tenkan-sen still has not crossed above the Kijun-sen yet. But it's going to be a little slower than your traditional daily chart, which is a little faster when it starts moving. Each one of these candles represents 1 week versus this one here that represents the daily. But what happened today was significant. The fact that it broke through with such force, with higher volume, and you can see that my secondary indicator, directional movement index, with a setting of 9, you can see the ADX is moving up. That's the white line, and that represents momentum. So the momentum is increasing. The green line represents the direction. When you see the green line above the red line, that's telling us that the direction is up, right? We're in an uptrend, and makes it very clear. Like if you go back in time, look over here, for example, you can see that when the red line crossed above the green line right there, it led to that drop, right? And then once the green line got back above, it started moving up. So over here, it's got stuck in the cloud for a little bit, so there was a little bit of consolidation taking place, and then what we've got is a breakout above this box here. And so I like what I'm seeing in all these areas on the daily chart, and of course on the weekly chart too, because the cloud itself is also bullish. Everything looks good. Now, as I go through the rest of these, you're not going to see such beautiful charts, okay? These are going to look a little bit ugly. All right, they're not going to look right. There's something off about them. That's why they don't get the blue flag that these guys got up here. So let's see. CLF, Cleveland Cliffs, the steel company. Now, here's a weekly chart. And what you'll notice is that last week, price reached that level, the 200-day moving average. In fact, it surpassed the 200-day, and then it basically dropped. And then it dropped some more. You can see here, down 12.99% just today. That's the weekly chart. Let's look at the daily. That's the daily chart. It gapped down. So remember, one of the rules of Ichimoku is you really don't want to be adding positions in any stock if price is under the Tenkan-sen, the Kijun-sen, okay, under the cloud or inside the cloud, or under the cloud. Okay, so that's the key thing. Right now it's under, and you can see here it was stalling right there, and it dropped 12.99%. Big drop for Cleveland Cliffs. So, yeah, not a good one. CMG, I'd stay out of that one too. Look at this one. This one gapped down significantly. This is Chipotle Mexican Grill, down 18.18%. Yikes. Okay. So a big gap that you can see that happened here. This overnight yesterday, it opened up at this level, and then it opened. Let me show you where it opened. It opened here. Whoops. At that price right there, and then it closed right there. And unlike the other, chart that I just showed you, when you see the negative DI above the positive DI, that's very negative. When you see the ADX moving up and you see volume increasing, it's not something I'd be jumping into. Okay. This was already in a downward channel. It was under the cloud. This is why basically I teach that it's not a good idea to add positions when price is inside or under. Why? Because there's no demand. No demand for the stock. No one's interested. And price will just continue dropping. And we don't know exactly when it's going to come out. We'll know when it comes out of gets above the cloud. And it doesn't necessarily mean that that's going to definitely be the end of that downtrend. Here's some options here. Some examples of deck, okay, where price got above the cloud and then dropped, got above the cloud here too and then dropped. So it doesn't always pan out, especially when you're still under that declining 200-day moving average, okay, and you know that that's lurking above and you haven't taken out. So like, for example, right here we had that level right there that was never taken out. That high was never taken out, and then it broke through that level and dropped some more. And we might see another drop and another drop. So stay out of deck. What about GAP? It's above the cloud right now. It's above the 200, but the 200 is flat. So on the daily chart, yeah, it doesn't look terrible, but let's look at the weekly, because we want to look at both time frames. That's really important. On the weekly chart, we're inside the cloud, so there's a lot of noise here. And when you see a stock basically crisscrossing all over the cloud like this, and you see the cloud itself, all right, is actually flat. Okay, it's not a good idea necessarily to jump into that right away. So you want to see some strength here, and I don't see it. HBAN on the weekly chart, also under the moving averages. I'd stay out of Huntington Bank shares. Okay, not the time to get in. Here's a daily chart for you. Does that look pretty? No. JP Morgan. is starting to show some strength. There's a few things that haven't materialized yet. Price has, in fact, gotten above the cloud for the last 4 days now, right? It happened here this week on Monday, October 27th. It got above the cloud. The problem was that the Tenkan-sen is still under the Kijun-sen. So, you know, you can see that the momentum is still declining here. Chiku span, the white line, is still underpriced, so that's not giving us a buy signal. The cloud is kind of uncertain right there. You can see it, you know, it's not quite there yet, but once we see a little bit more strength, we need to see at least 2-3 more days of price moving up to confirm that this is, and make these indicators start to show some strength. Maybe the momentum starting to increase, then it will make sense at that point. Because if you look at the weekly chart, it is pretty bullish. It looks like it's going to close above the Tenkan-sen, and so next week JP Morgan might be something that I'd be looking at. Okay, KBE, Spider S&P Bank ETF. You know, here it is in the weekly chart. It just closed under the Kijun-sen. I take that back. It hasn't closed yet. This is a weekly chart we're looking at, and we won't know until Friday where that's going to be because it is still in the process of forming. But it is currently under the Kijun-sen. It's under the Tenkan-sen. It's unlikely to get back above unless we have a big move up. We would have to literally make, we'd have to basically move about 3.8% away, 3.8% just to get above the Tenkan-sen tomorrow. So if we see that, that'd be interesting. But, you know, you still got to have that cloud lurking above on the daily chart. Here's now. ServiceNow Inc. inside the cloud under the 200. No on ServiceNow. RCL, Royal Caribbean Group. No on this one. It's currently under the cloud, but it's stalling at that 277.08 level. And so we'll see what happens with this. It's also at the 200-day moving average, but I wouldn't be jumping into that. RSP is the Invesco S&P 500 equal weight. And this one here is looking a little bit not so great if you think about it. It's created a double top pattern right there. Okay. And so if we also break through this low, that's going to be very dangerous for the RSP. We haven't yet. We're inside the cloud. We're sort of in an indecision stage. We're in consolidation stage right now. It doesn't look great here either if you look at the directional movement index, right? So that's the daily chart. Let's look at the weekly real quick. See how it's currently under Tenkan-sen? That's not good either. SBUX on the weekly, under the cloud. On the daily chart, also under the cloud. So Starbucks, not a stock that I would be adding to my portfolio anytime soon. It needs a lot of work for this thing to turn around. Right now, it's still in a decline. Look at the volume increasing. That means that there are more and more sellers coming in, stepping in to push the price down. They're shorting it. Okay, not good. All right, let's get to the rest of these now. We're going to look at the Mag 7, Apple. It was up 0.63%, but it formed a reversal candle, a spinning top, like the one I showed you guys earlier. But overall, on the weekly chart, it's been looking more bullish. On the daily chart, it's been looking more bullish. So I like it. I think for me at least personally, until the tariff situation is clarified a little bit and we have more clarity on what's going to happen between China and the United States. And I'm going to stay out of this one because Apple, like I've said many times before, is very exposed and very reliant on China. If our relations with China shut down and there's issues, this company, I think, is going to get pummeled, the stock price. Tesla. There's nowhere else that they're manufacturing at the same level. And it would take about a decade or so just to get to the same level of manufacturing that China has right now with Apple. So, I mean, you can Google that. You can check out, just do a quick search with AI and you'll see how reliant they currently are on China for all the manufacturing that they're doing. Yeah, they're trying to get into other countries, but by the time they get to that same level, or even in the United States, it would just literally take about a decade just to get there. So yeah, keep that in mind. Here's Tesla. And Tesla on the weekly chart, okay, stalling again at that trend line right there. You see that yellow trend line that I drew? So it came up to it, and what happened? It dropped. Big surprise. Here's the daily chart. Came close to it right there and then dropped. So now it's under both of the moving averages. It's down 4.64%. I'd stay out of Tesla for now. Meta also dropped. Look at this one, down 11.33%. No good, no good. Under the 200-day moving average, it created a spinning top. After a big drop like that, this could be bullish as a candle, because remember, it's all about where you see the candle. So let me just show you again. If you see that same exact candle after a drop, right? So like, let's say that you see a spinning top after prices dropped. Okay, that's when it's bullish. If you see it at the top of a move, okay, that candle there, that's very bearish. So it's all about the positioning of the candle. It's not the candle itself. It's about where it is in relation to, you know, the prior price movements. So again, up here, it's bearish because it's after a move up, right? Price was moving up, like you see there. Now that it's down at these, it's dropped so much, and there's indecision right there. But the problem is, I would not be touching Meta right now. It is looking very weak on the daily chart, and here it is on the weekly chart also, under the Kijinsen. Okay, let's look at the sectors. Now, out of the 20 sector and ETFs that you see here, it's just 5 that look good. XBI, we'll start off with that. Biotech. Ooh, that's interesting. It broke through. Let me show you the daily chart. See that candle right there from October 16th? It's been holding up above it. I like what I'm seeing here with XBI, actually, because you can see it broke through it this week on Tuesday, I believe. No, Monday. Sorry. Monday, October 27th. Closed above it, right? That 110.96 level. And then the next day stayed above it. And then let's see, where did it close there? It closed at 110.96 on Wednesday. Right on that level, if you look at the closing price. And then today it's above it at 111.91. So the fact that it's holding so well, it seems to me like it's just building a nice little base here before it potentially pops some more. So I like biotech right now. And that seems like a normal place where, like, you know, when there's uncertainty about where to put money, I think biotech tends to be a place where money goes. Industrials, XLI is stalling, but overall it's still looking okay because price is on the weekly chart above the Tengen-sen. It has not got above that 155.94, but it's so close to it. It could certainly do that tomorrow. Here's the daily chart. Today it pierced that line, the 155.94, and then came right back down. So again, it's also building a base, but it's building the base under the resistance level of 155.94. XLK popped. We had that reversal candle. And that, like I said before, if you get a reversal candle after a move up, expect it to, there's a higher probability it's going to drop, especially if price gets under the low of that candle, which it did. So now I think there's a higher, again, probably a continuation to the next level of support. We'll see if I'm correct. It doesn't always pan out that way, but I'm just saying there's a higher probability, right? There's no guarantees in the market. So XLK is dropping a little, down 1.23%, but still looking bullish overall on the daily and on the weekly chart. I don't like what I'm seeing here on the weekly chart. It looks almost like a shooting star type candle, which is also a reversal candle. We'll see what that looks like tomorrow. That could be an omen right there, a really bad omen for tomorrow. If the technology sector drops more tomorrow, that's going to form into a negative candle. That's going to look a little bit like this, the shooting star. Okay, and we don't want that. That's a bearish after a move up. We do not want to see that type of candle. It's one of the candles I fear the most, folks. The shooting star, very dangerous, dangerous, dangerous. All right. Let's see. COPX, shooting star for copper miners ETF on the weekly chart. And it's been just kind of staying in this range here on the daily chart. Okay, it looks like it's so it had that pullback. Now it looks like it's trying to hold up, but it was down 1.16% today. So it's not really clear what's going to happen. The ADX is telling us there's no true direction here because the momentum has been declining, and so is price. And you can see that the positive DI and negative DI, they're around the same level. So it's just uncertain here. It looks almost like a kind of like a pennant type pattern that I'm seeing right there, right? And we'll see where it breaks through because it's been coiling up into this little tight range that you see here. Okay, SMH, another example of how a reversal candle can lead to a pullback, right? There's the doji after the move up, you know. Remember, that's like multiple candles, 5 candles in a row of the semiconductors moving up, down 1.32%. We saw how NVIDIA dropped as well. GDXJ, that was a warning for me yesterday. GDXJ, Market Vectors GDXJ, the Junior Gold Miners ETF, today was actually showing some strength, up 2.35%. But it doesn't get the blue flag because price is still under the Tenkan-sen Kijun-sen, and that we did have a negative crossover here. So, but there seems to be a little bit of support right above the cloud here. Gold miners might potentially pop again, but right now we don't have that evidence, not enough evidence to basically be conclusive on that. Oil K is still in between the two moving averages and under the cloud, no on that. XLC is inside the cloud, no on communication services. IBIT, Bitcoin, is under the cloud still, dropped another 3.75% today. Gold, there's GLD, that one, like I said, it started to show a little bit of strength. That's called a bullish harami pattern, these two candles right here. And I mentioned that today in the post that I posted. So a bullish harami, again, this is what that looks like. It's a double candle pattern, and it consists of 2 candles, this large red candle and a smaller bullish candle that follows it. And harami in Japanese stands for pregnant. So there's a large body and there's a small body. And that is bullish when it's in that order. The opposite is the bearish harami, which is over here, is when you have a large green candle followed by a small red candle. So that's the bearish version, and the bullish version is the big red candle followed by a smaller bullish candle. Okay? So let's go back to that. There it is. Bullish harami. Will it turn into something? There's a higher probability tomorrow that gold will go up. That's all I can say. The only concern here is that you've got resistance. Kijun-sen and Tenkan-sen lurking right there. XLRE, another bullish harami. Okay, real estate looks like it might bounce here tomorrow, but it's under the cloud. I'd stay out of that one. SLV, moving up. That's silver, the silver ETF, which was also one of our requests from our members, up 2.57%, still under. So I would be holding off still on adding any new positions in silver until we got some clarity here, because it could certainly just drop again. And you can see that the directional movement index is not clear, right? So hold off on silver, but it's looking like a little stronger these last few days. XLY, consumer discretionary, is inside the cloud. Utilities is in between. XLU is in between the two moving averages. XLV, which is the healthcare, is under the Tenkan-sen currently, but up 0.22% with a bullish harami. XLP, consumer staples, is under the cloud, no on consumer staples. XLF, financials, is under the cloud on the daily chart, no on that one. We do have a bullish harami though, it was up 0.27% today. Energy, under the cloud and above the 200, so XLE, I would stay out of that one. XHB, home builders, that's also under the cloud, no on XHB. And the XLB, which is materials, you can see here, dropped under the 8640. That's a weekly level. It's an old, actually that's an old trend line from back here. I don't think it really applies anymore. I'm going to get rid of that. And this one. So, I mean, the bottom line is that, think about it. Look at all of these sectors. Look at all these ETFs. And you only have just a small handful that's showing some strength here. That's it. So we have to be extra cautious. And, you know, if things start to fall apart, it's important to know how to hedge your account. I'm not hedging yet, but if I do, I'm going to share that with members. Alrighty, let's take a look at the list now of our members' requests. And we're going to start off with SOXL. That's the Direction Daily Semiconductor Bull 3X. So this one is a little bit on the riskier side. Why do I say that? Because it has a high beta of 5.36%. It moves about 3 times. Okay, let me just bring that up. It is 3 times the ICE semiconductor index. All right, and so just to give you an idea of how much it moves. This last week it moved up 15%. In the last month, 28%. Year to date, it's up 73.53%. And but remember, what goes up that much can also drop quite significantly. If you look at if we go back in time, for example, when remember when we had that drop in the semiconductor space that started back on July 12th, 2024, and price had dropped approximately 88% in this particular ETF in just 9.2 months. Now, since then, it actually has moved up approximately from these lows here. If we were to measure from there, you can see 471.98%, which is pretty crazy, right? In such a short period of time. And that's April 11th of 2025. So that's a big move. Now, what does it look like technically? We are above the Ichimoku cloud. On the weekly chart, we're above. You got the Senko span here, Senko span A above Senko span B. We've got the Chiku span above the cloud. Everything looks pretty good. ADX, the momentum is still up. Okay. Positive DI is still above the negative DI on the weekly chart. Let's look at the daily now. So you can see yesterday, okay, on Wednesday, October 29th, we had that basically a doji, and that is a reversal candle. And that did lead to a drop. So it dropped 4.03% today. Again, it's probably more than likely to drop a little bit more down to the next support level. It could be another, and guys, just so you know, like we're talking about a potential 8.8% drop from where it currently is to just to find support at the Tengen-sen. That's where it could potentially stall. All right. So yeah, right now it's not looking particularly strong here. If you look at the 4-hour, these last 12 hours, it's been dropping. There's the 2-hour, the 1-hour, okay. And if we look at the 30-minute chart, it looks like it might find some support at the cloud, but it dropped, and we have a negative crossover here of the Tengen-sen. I'm sorry, yes, the Tengen-sen under the Kijun-sen on the 30-minute. So this is one of those stocks that you want to trade actively. You have to really monitor something like this because it has such big moves. And sometimes it makes sense to also look to see how things are on the shorter time frames. If you're profitable right now, I'd be like taking some profits, obviously. PILBF, Pilbara Minerals Limited. Let's look at the weekly chart first. So this one's up. You can see it's above the cloud. You can see the future cloud is bullish. And so the future cloud is, that's the Senko span A and the Senko span B. You can see the positive crossover that happened. We always want that to be above, right? The light colored blue line above the purple line. Now, what's happened recently, these last 2 weeks, it's moved and basically closed. It looks like it's going to close for a second week above the cloud, but it's stalling at the 200-day moving average. So that's really important to keep in mind. We might see a stalling here. The volume has also been declining. Doesn't mean that this thing won't continue running because the momentum is still moving up. And if we look at the daily chart, it still looks pretty bullish. But just be forewarned that on that weekly chart, we're hitting that 200-day. And in the past when we did that, like back here, all right, when we came right back up to it, it stalled and dropped. So just keeping a really close eye on this one. But right now, it looks nothing negative to say about PILBF, Pilbara Minerals Limited. How about APLD? Let's look at this on the weekly chart. You can see the last 3 weeks we've been receiving multiple reversal candles here, but it has been holding up for the most part in this little base. And on the daily chart, yeah, there it is. It's currently above the Tengen-sen and Kijun-sen, above the cloud. So yeah, it gets the blue flag because the technicals look good, but the profit margins here are pretty negative. I'd be a little bit cautious with this one. Okay, the beta is pretty high as well, 4.04, which means that it can have some pretty volatile moves. The next earnings are on January 13th, 2026. All right, next, NVO, Novo Nordisk. This one here, obviously, if we look at the start with a weekly chart, has been in a decline for, we're talking about since it got under the Tengen-sen right there. Actually, we'll call it, this will be the September 6th of 2024. It's dropped about 61.82%. Now, this has been in a decline. And so, again, we've got a series of lower highs here, right, that have not changed. This has not changed. It's still stair-stepping its way down. It's still under that trend line right there. And it looks like it's probably going to continue dropping. Now, if price gets to this low, around this area, and then we see it bouncing off that level, that could be the end of this breakdown here. It's in the biotech industry, and then we could see a recovery. But right now, it's just not. It's looking pretty dire. The ADX is moving up, negative DI is moving up, positive DI is moving down. That's not good in the weekly chart. If we look at the daily chart, we're still under that declining 200-day moving average. It doesn't look good. It doesn't look good here. Today we had a bullish little spinning top. This might turn into something, potentially. But all of the elements of Ichimoku are telling us to stay out of this one. So I would not recommend buying this for sure. Okay. WPM on the weekly chart is stalling right at the Kijun-sen. So that's Wheaton Precious Metals. Like I said, gold is seeming to show a little bit of strength like these last few days. This is the weekly chart. Hopefully it will hold up and close above the Kijun-sen. That will be a good sign for next week. All right. After this decline that we've seen, here's a daily chart, right? So you can see that it is in fact kind of stalling in this area here. Will it? And we have a bullish engulfing pattern that just formed. So if you look at the these two last candles, here's Wednesday, here's Thursday. Higher probability that will potentially break into the cloud. No guarantees though. Up 3.04%. All the elements of the Ichimoku are looking pretty negative right now because you see on the daily chart, the Senko Span A is under the Senko Span B, price is under the cloud, Chikou Span is under price, but we do seem to have a little bit of hope here that this might pop back above, after this pullback. We'll see if that's the case. And then SLVR, that one also looks kind of similar in that, like the gold, this is the Sprott Silver Miners and Physical Silver ETF. This one as well, it seems to be finding a little bit of support here, and it's got a bullish harami, like that other candle pattern that I mentioned earlier. So the ADX is just flat. There's no true direction here, but the cloud is, and the good news is the Chikou Span is above price here with SLVR. The cloud is bullish still, so this looks a little bit more bullish. And if it can get back above that trend line there, that would be a good thing too. See how, look at that yellow trend line there. It broke through it and it's been staying under it. So let's see if that can happen too. We will find out. What I'm concerned about is the volume here has been declining as price has been moving up. So that's not a good sign. We might see it move up a little bit, maybe as far up to the trend line and then start reversing course. It's very possible. We will find out soon enough. And that's going to do it, guys, for this video. Stay tuned for a quick pre-recorded tutorial of the Ichimoku indicator for those of you who are not familiar with it. And I will catch you all in the next video. If you look at the weekly chart for the SPY, we are obviously in a very strong uptrend here. Just really quickly, let me show you what we're looking at here. This is the Ichimoku indicator. It's a Japanese indicator that was basically incepted in the 1930s, late 1930s, folks. It was published in the late 1960s and then came here to the United States sometime in the 80s, I think, is when they started adopting it. And with software, imagine trying to plot this on a piece of paper. It's based on mathematical models, but imagine trying to do that before computers. So let me just briefly tell you what these lines mean. The green line is the midpoint of the last 9 periods. It's plotted right there. Not the closing price, but the midpoint. So think of each of these candles. It takes the highs and lows of the candle and then divides it by 2, finding the midpoint of each candle. So it's giving us an average, really. And the 9 is, the green line is a 9 period. So it's looking at the last 9 periods. This one looks at the last 26 periods, the midpoint, and projects it right under the candle, okay? The white line that you see right over here on the left, that's the closing price today. All right, so that's today's closing price projected 26 periods ago in a line form. Okay, there's different ways to plot price. So in this case, what we're looking for is for the white line to be above the candle 26 periods ago. And we're looking at a weekly chart, so that's 26 weeks ago. All right, there's the candle 26 weeks ago right there on May 2nd. And so when the white line is above it, it's bullish. If the white line is under, bearish. Here's some instances, for example, where the white line was under for an extended period of time when it probably didn't make sense to be adding positions at that time, okay, in the markets. I'm sure you guys remember 2022, right? It all started right there around 2022, and then it continued through, and then things started to emerge around mid-2023, and then the market started moving up. So what else is this indicator comprised of? It's the cloud itself, right? The Ichimoku cloud. And so that's comprised by taking the Senko span A is the upper line, and that takes the midpoint of these 2 moving averages. And what it does is it projects the midpoint 26 periods into the future. Very unique concept. And then the purple line is called the Senko span B. That takes the midpoint of the last 52 periods, these candles here. Instead of projecting it under the candle like it did in this case, it projects it 26 periods into the future. Cool, right? So we've got things that are plotting in the future. We've got things plotting in the past, all based on price. All right. And it helps to guide us, really. Think of it like that. It's a map, right? It's gonna give us some insights about what's transpiring at this particular moment on different time frames. We can look at this on a weekly chart. We can look at it on a daily chart. There's the daily chart right there. That's also bullish. What we want is price to be above the Tenkan-sen, the Kijun-sen, and the cloud. Okay. And if you're wondering what Ichimoku stands for, Ichimoku stands for at a glance. So the idea is to see quickly, visually, where are we? Okay, on this chart. Very briefly, if all these elements are in play, that we have a very strong uptrend. When things start falling apart and price gets under any of the moving averages or inside the cloud, then there's weakness, and we can identify how strong the weekend trend is. Thank you for watching. Appreciate all of you guys. Don't forget to hit the like, subscribe button, and click the join button, and maybe consider sharing this video with someone. And I'll catch you all in the next video.